Okay, so hello again, students. Welcome to another video lecture under your course Fundamental of Accountancy, Business and Management 2. So finally, we could already move on in discussing the topics that we are supposed to discuss under this course. Well, as I've discussed during your orientation, this course is generally divided into two parts. Okay, so in the first part, or in the first bulk of this course, we will be discussing about the summarizing and the interpreting phase of your accounting process. Okay, and in addition to that, I will also teach you how to prepare later on a bank reconciliation statement. Okay, and of course the last bulk of this course is of course taxation in relation to accounting. All right, so in this first part of our lecture, I will be discussing your summarizing phase first. Okay, and therefore you will be taught on how to prepare now the various types of financial reports or financial statements. All right, so at the end of this lecture, you should be able to prepare already an income statement or a statement of comprehensive income, prepare a statement of changes in owner's equity, your statement of financial position, or also called as your balance sheet. Okay, you also have there to you also have to learn how to prepare now a statement of cash flows. Okay, so when we say complete set of financial statements, okay, you have there a list of the financial reports or financial statements that a business must prepare at the end of every accounting period. So a business should be able to prepare now an income statement or a statement of comprehensive income, a statement of changes in owner's equity, a balance sheet or a statement of financial position, your statement of cash flows. Okay, and these notes to financial statements, well, this one we really won't discuss how notes to financial statements are going to be prepared. Okay, because this is more on the or you will deal with notes to financial statements when you are already in practice. Okay, because notes to financial statements are basically the summary of the significant accounting policies adopted by the business now in the preparation of the other financial reports or financial statements. Okay, there are some computations also which may be considered as explanatory notes on how we were able to derive particular amounts, or financial data in the other financial reports or financial statements. So combine all those, they will now be called notes to financial statements. All right, so let's start in discussing first how to prepare an income statement or a statement of comprehensive income. Okay, before we move on, whenever you are learning of a particular or mastering a particular financial report or financial statement, okay, there are only two things that I want you to always remember at the least, okay, in understanding a particular financial report or financial statement. So the first question that you should ask yourself is, what is the purpose? Okay, why do we prepare this particular financial report or financial statement in the first place? All right, because if you know the purpose, then you will be able to appreciate, okay, the importance, okay, of preparing this particular report or financial statement to the business. Okay, so what's in it in the business, or what's in it for the business to prepare this type of financial report or financial statement? That's the purpose. Once you're done determining the purpose, the next thing that you should ask yourself is, what are the elements, okay, that must be reflected in this particular financial report or financial statement now, because these are the essential accounts okay, that must be reflected in this financial report. Okay, it would help you to easily recall, okay, how to generally prepare the form of this particular type of financial report or financial statement later on. Okay, so for income statement or statement of comprehensive income, generally the purpose we in preparing this particular financial report or financial statement is of course to determine the results of the operations now of the business. Okay, whenever you see the phrase results of operations of the business, okay, or simply the term operations, I want you to immediately develop in your minds that it would have something to do with the profit directed activities of the business. Okay, it would have something to do with the profit generating activities of the business here now. Okay, so basically the only way for us to determine how well the business performed is, of course, right, computing whether the operations resulted to a net income or a net loss. Okay, so there is a net income if the total income of the business is more than the total expenses of the business. Okay, on the other hand, if the total income is lesser than the total expenses of the business, therefore it is an undesirable situation on the part of the business here now, then we call the difference as net loss. All right, so that's for the purpose. Now for the elements, okay, these are the accounts that you should be able to reflect now in an income statement or a statement of comprehensive income. Of course, you have to reflect there the amount of the income by the business, depending on what type of business activity the business is engaged in. If it is a service type of business, then we call the income of that business as revenue. If the business is a merchandising or a manufacturing type of business, then its income is reflected in the report as sales. Okay, so when we say income, how did we define income before? Income, diba, are the increases in the company's assets or company's capital. Okay, well, directly it affects the capital. Right, it refers to the increases in the capital. Okay, and such increase is directly attributed to the profit generation activity of the business. Okay, the fact that the business owners invested a particular amount of capital in the business may also result to the increase of the capital or the assets of the business. But take note that investments by the owners are not really part of the profit generation activity of the business, so they may not be considered as part of your income. Okay, but the fees that you will collect when you render your service, okay, or the money that you would be able to collect when the business was able to sell a particular product or goods, okay, we should say that it is part of the income because these amounts are directly attributed to the profit generation activity of the business. Okay, so do not forget the definition of an income. Income, this refers to the increases, okay, in the capital or the assets of the business other than the investments made by the owner or the owners now of the business, meaning these increases are directly attributed now to the profit generation activities of the business. Okay, you have there your cost of goods sold. Okay, from the term itself, cost of goods, this is only used in a manufacturing or a merchandising type of business because the products we sell, okay, to our customers in a merchandising or a manufacturing type of business are called goods. Okay, there is also what we call cost of services, but when you say cost of services, these are simply the expenses incurred in a service type of business. But for a manufacturing or a merchandising type of business, we have a separate account, okay, to reflect the amount of the goods that the business was able to sell to its customers now, and that is the cost of goods sold account. Okay, now we also have here what we call your other incomes. Okay, if the income is earned, okay, from another activity which is not part of the regular profit generating activity of the business, meaning the regular course of the business, then we consider this increase in the capital as other incomes. Okay, so for example, if the business is regularly engaged, originally engaged in the selling of bagoong, okay, bagoong products, right, or any other type of goods for that matter. Okay, so if it is engaged in the selling of goods, then the regular course of business, the profit generating mechanism of the business shall only be attributed from the selling of this particular type of products, right? Okay, but if, let's say for example, the business has, okay, an available space beside its store, okay, it owns an idle space beside its store, and it decided to rent it out to another person or another business, the rent income that may be collected, okay, from that activity is not really a part of the regular course of the business. Okay, therefore, whatever amount, okay, that may be collected from the renting out of space shall be considered as part of other incomes. Okay, your other incomes again are increases in capital, okay, which are not considered, of course, as investment by the owner or the owners of the business, and at the same time they are not derived from the regular profit generating activities of the business here now. Okay, so that's for other incomes. Of course, you have their expenses. When we say expenses, okay, this is just the opposite of income. They result to a decrease in the company's asset or the company's capital, and they are also directly attributed to the profit generating activity of the business. Okay, if the expense is not incurred in the regular course of the business, and at the same time they are not considered part as withdrawals or drawings by the owner or the owners of the business, then we shall consider them as part of your other expenses. Okay? In the same way as how we explained other incomes. Okay, expenses that are incurred not in the regular course of the business shall be considered part of your other expenses account. All right, so do not forget those elements, because these are the very same elements that you are going to use, okay, in preparing now an income statement or statement of comprehensive income. Okay, so let me just show to you the instance when is there a net income and when will the business incur a net loss. All right, if the total income, okay, if the total income of the business is more than its total expenses, okay, for a particular period of time, at the end of a particular period of time, then we say that the results of the operation resulted to a net income. Okay, a net income, of course, is favorable, okay, on the part of the business, because it increases the wealth now of the owners of the business. Okay, apart from increasing the capital of the business, it really is intended to increase now the wealth of the owners of the business. Okay, so a net income should be reflected as a positive value in our income statement. All right. On the other hand, if what happened is that your income or the total amount of your income is less than the total amount of expenses incurred, then the results of the operations of the business is a net loss. Okay? A net loss, on the other hand, is of course an unfavorable situation on the part of the business because it decreases, okay, the wealth now of the owner or the owners of the business. Okay, so do not forget the instances when may the business be said to have earned a net income and when may the business be said to have incurred a net loss. Okay, so yeah, this is very important because these are the ultimate amounts or accounts that must be reflected, okay, in an income statement or your statement of comprehensive income. Well, essentially this is the purpose why we prepare an income statement in the first place, to determine whether the results of the operations resulted to a net income or a net loss. Okay, so now in preparing an income statement or a statement of comprehensive income, there are various ways on how to present it. Okay, we call them your forms of income statement or the forms of statement of comprehensive income. Okay, so the two ways on how to present your income statement may refer to your nature of expense method or your function of expense method. Okay, the difference really lies on how we are going to present the expenses incurred by the business. It does not really talk about the manner on how we should present the income earned by the business, but more on the manner on how the expenses shall be summarized in this particular report. Okay, such that under your nature of expense method, your expenses are simply itemized in the report. Okay, when you say itemize, you are just simply going to make a list, okay, of the expenses incurred by the business now. So you are not going to reclassify them into another group or other groups of expenses. Okay, you are just simply going to make use the original accounts used in the journals or in the ledger of the business here now. Okay, so make a list of the expenses, you itemize them, then you are preparing you are applying your nature of expense method. Okay, on the other hand, if you apply your function of expense method in preparing now an income statement, then you should further reclassify your expenses according to what type of expense they are. Okay, now generally we have, or your expenses, all types of expenses that are attributed now to the profit generating activity of the business shall be considered your operating expenses. Okay, so all types of expenses that are directly attributed to the profit generation activity of the business shall be considered operating expenses. Okay, your operating expenses may be divided into two. We have what we call your selling, okay, and your administrative expenses. Okay, your selling is also called as distribution expenses, so you may present them as selling and distribution expenses. Your administrative expenses may also be presented as general or administrative expenses here now. Okay, so well, that's the simple way on how to distinguish between your nature of expense method and your function of expense method. So how are we going to present now the expense accounts in the income statement or the statement of comprehensive income? If the expenses are itemized, then we are applying the nature of expense method. But if the expenses are further classified either into selling or administrative expenses, then we are really applying your function of expense method. Okay, well, in practice, no? In practice, nature of expense method is usually used by a service type of business. Okay, it is usually used by a service type of business where they just simply itemize the expenses incurred. All right, because in a service type of business, well, it is not really engaged in the selling of goods, right? So there is really or there are no expenses that may be said to be related in the selling activity of the business, because what a service type of business is doing is providing or rendering now of a service. Okay, so nature of expense method is usually applied or used in a service type of business, while your function of expense method, well, since we have there your selling and distribution expenses, this is usually applied by merchandising or manufacturing types of businesses. Okay, so let us discuss further your types of expenses when we use your function of expense method. All right, so when we say operating expense again, operating expense class, as I've told you a while back, is the general term for all the expenses incurred by the business in its profit generating activity. Okay, and your operating expense may be divided into two. We said we have there your selling or your distribution expenses. We also have there your administrative expenses, or also called as your general and administrative expenses. So how are we going to classify, okay, an expense as a selling or as administrative expense? Okay, it is part of the selling expense if it is it involves, okay, the storage, okay, the preparation, okay, the distribution, the distribution, the advertisement of the goods that the business is selling. Okay, so if the expense is attributed now to the storage, to the preparation of the goods, to the distribution of the goods to the customers, and the advertisements, which would now increase the sales of the business, then they all refer to selling expenses. Okay, anything that would have something to do now with the product, okay, any expense that you could directly attribute to the product that the business is selling to its customers may be part of your selling expenses. On the other hand, administrative expenses are the general office expenses, okay, that are being incurred by the business. Okay, so this may refer to utilities used in the building of the business, the communication expense, the rent expense, or the amount of rent that we are paying for a particular space, for example, is part of your general expense, because they may not be generally attributed to the product that the business is selling to its customers. Okay, the supplies expense, okay, the supplies that are being used in the office, they are usually classified under your general or administrative expenses. Okay, so the easier way, okay, for you to classify whether an expense is a selling expense or an administrative expense, okay, is to determine whether such an expense, okay, may be directly attributed now to the storage, the preparation, the distribution or the advertisement of the products that the business is selling to its customers? Because if the answer is yes, then this type of expense is part of your selling expense. If the answer is no, meaning they are not directly attributed to the things we listed here, okay, then they are part of your administrative expenses. So do not forget that one, because if in the problems later on you would be required to prepare an income statement using your function of expense, then you should know how to reclassify the expenses, okay, and determine whether they are part of your selling expenses or your administrative expenses. Alright, so as we discussed a while back, when we say or when we prepare an income statement or a statement of comprehensive income for a service type of business, the method or the form that is usually used is the nature of expense method, where we just simply itemize the specific expense accounts in the report. Okay, so the very same expense accounts that were recorded in the journals or in the ledgers of the business will be the same accounts that will be reflected in the income statement if we make use of your nature of expense. Okay, take note that your function of expense may not necessarily be applicable for a service type of business, because when we take a look at the nature of the operations now of a service type of business, it is not really engaged in the selling of goods, or it's not engaged in the selling of goods, rather it is engaged in the provision, okay, or the rendering of services. Okay, so it may not be proper to look for expenses which are involved in the manufacturing, the storage, okay, in the distribution of the products, because services are not really stored, services are not really distributed, okay, they are not necessarily being manufactured, unlike physical goods. Okay, that's why I said under service type of businesses, the form that is usually used in preparing now an income statement is your nature of expense. Okay, so it would be different, if we take into account a merchandising business, because when we prepare for an income statement of a merchandise or a merchandising business, it may apply either of the two forms already. So we could apply nature of expense method or function of expense. Okay, under nature of expense, just the same, we are just simply going to itemize. Okay, we're going to itemize the specific accounts, so list down all the specific expense accounts that were included by the business. Just take note of this new account title here. You have your cost of goods sold. Okay, your cost of goods sold is not really an expense, rather it is just reflecting the total amount of the cost of the products that we were able to sell now to our customers. Okay, so how much these particular products originally cost. Okay, and that will basically be reflected as cost of goods sold. Okay, under your function of expense, still you have to separate your cost of goods sold account, and when we present now the expenses, which we generally call operating expenses, we have to determine whether they are part of your selling or your administrative expenses. Okay, so what is the easy way to determine whether an expense is part of your selling expense or a part of your administrative expense, well, we were able, okay, to determine various activities which would immediately tell us that this expense is a selling expense, okay, such as if the expense is attributed now to the manufacturing of the product, okay, the distribution of the product, the advertisement that were spent, okay, or the amount, okay, spent for the advertisement in the selling of products, okay, the storage, okay, the cost of the storage use in storing now the products. All of those would be directly attributed to the product, therefore they shall be part of your selling expenses. Otherwise, if the expense is not attributed to any of those that we have mentioned, then they shall be part of your general or your administrative expense. Alright, so yeah, okay, so we have to take note of this: your sales here and your cost of goods sold, okay, because they should be presented, they should be presented in a separate computation, which is called notes, okay. Actually, this is one of the components now of your notes to financial statement, okay. You may be allowed to compute for the net sales or the cost of goods sold directly in the income statement or the statement of comprehensive income. However, many businesses still prefer to separate the computation for the net sales and the computation for the cost of goods sold, and they are going to be reflected as part of the notes to financial statement, okay. So we have to take note on how to compute for the net sales. Take note that the sales that must be seen or that must be reflected under the income statement must already be the net sales, okay. So there is a way on how to determine now your net sales, okay. Your cost of goods sold at the same time must be derived, okay, in a separate computation and must be reflected as a notes to your income statement, okay. So let us review how to compute for your net sales and your cost of goods sold, okay. For your net sales, of course, you have to take note of the following accounts. You have to determine the amount of your gross sales. When you say gross sales, nothing has been deducted yet. It's the totality, the total amount of income without deducting any amount yet, okay. So from the gross sales, we shall deduct these two. You have your sales returns and allowances and your sales discount, okay. As a review, sales returns and allowances refers to the amount of the products that were returned to the business now by reason of being defective, okay, or that the product is not the product that were ordered by the customer, so necessarily they have to return it back to the business, alright, and that must be deducted from the amount of our sales. The same thing is true for your sales discount. Discount essentially are the reductions, okay, in these are the reductions in the amount of the sales that we were able to have in a particular transaction. So gross sales, the total amount of sales, less the amount of products that were returned, less the amount of discount given to the customers, then we shall have your net sales here. So this is the amount that is going to be presented as sales now in the income statement. Alright, now for your cost of goods sold, okay, you have to take note of the following accounts also. You have merchandise inventory beginning, purchases, freight in, purchase returns and allowances, and if I may add here, you have here your discounts also. Okay, purchase discounts. We have your total goods available for sale and your merchandise inventory end. Okay, so where do we get the amount now of your merchandise inventory beginning? The merchandise inventory beginning is the amount of the merchandise inventory reflected in the unadjusted trial balance of the business. So if the trial balance is still considered unadjusted, the amount of the merchandise inventory you see there is your merchandise inventory beginning. Okay, now of course, if the business applies now your periodic method of inventory, it uses the temporary accounts purchases, freight in, your purchase returns and allowances, and your purchase discounts. Okay, so when the business will purchase additional merchandise inventory, it will be temporarily recorded as purchases. Okay, freight in, on the other hand, is the amount of the delivery cost. Okay, the delivery cost in purchasing now the merchandise inventory, so that if the delivery cost is called freight in, then it shall be part of the merchandise inventory of the business as well. Okay, you have there your purchase returns and allowances, this time on the point of view of the business, who is the buyer. Okay, when the business will return inventories which it consider as defective, then it shall reduce the amount of the merchandise the award of the purchase allowances. If we were given discounts in the inventories that we purchased, then it shall reduce as well the amount of our merchandise inventory. Okay, so let me just rewrite this formula. So you have there your merchandise inventory beginning. Okay, you add your purchases, the additional merchandise inventory that were purchased during the year, and then your freight in, the amount of delivery cost that is going to be added to the amount of our merchandise inventory. Now, if there are any purchase returns and allowances, we have to deduct it. Okay, and of course, if we were given discounts with the inventories that we purchased, we also have to deduct it from the amount of our merchandise inventory. Okay, so the resulting figure there, should give us what we call the total goods available for sale. So this is the total amount of goods that are available, okay, for the business to sell to its customers. So there are total goods available for sale, and then we learned in Fab M1 that under your periodic inventory method, how do we determine your merchandise inventory end? The merchandise inventory end is determined through physical counting. Okay, so the business will conduct a periodic physical counting of the inventories that they are going to sell. Right, so after computing for the figures, therefore, we may now deduct here the amount of inventory that were physically counted at the end of a particular period. So minus that merchandise inventory, then we will be able to compute now for your cost of goods sold. Okay, so I should say you have to memorize this particular formula, okay, in computing for the cost of goods sold, because this is very important, especially if the business applies the periodic inventory method, okay, in its accounting process. Okay, so merchandise inventory beginning, where do we get the amount of this merchandise inventory beginning again? The The amount is lifted from the unadjusted trial balance. Okay, the amount of the inventory in the unadjusted trial balance is the merchandise inventory beginning. On the other hand, your merchandise inventory end, there's no other way for you to determine that but to conduct a physical counting of what or of the inventories that are left, okay, in the shelves or in the storage of the business now. Okay, so we have to know very well how to properly use these temporary accounts under periodic inventory method. Your purchases is the account used for the additional purchases of merchandise inventory. Freight in is the delivery fee that is going to be considered part, okay, added as part of the merchandise inventory of the business. And of course, purchase returns and allowances, these are your contra purchases account, meaning they reduce the amount of your purchases. Returns, when we return a particular merchandise inventory that we bought, it shall reduce the amount of your purchases. When we were given a discount on the merchandise inventory that we bought, it shall reduce also, okay, the amount of our purchases. Okay, so for us to better understand, okay, the rules on how to prepare now an income statement or a comprehensive income, let us try answering a problem. Alright, so let's try to answer a problem, okay, concerning now a service type of business. So according to our discussion a while back, if we are preparing for an income statement for a service type of business, usually the form or the method that is used, okay, in presenting the income statement is your nature of expense. Alright, but before we formally start in preparing the financial statement or the income statement, let us first identify, okay, the elements that must be reflected in the income statement for Andrew Repairs. Okay, so what are the elements that need to be reflected in our financial report here? We have to determine the income, and since this is a service type of business, the income is reflected as the revenue account. Okay, after which we have to determine the expenses. Alright, so for the expenses here, we have various expenses incurred by Andrew Repairs. Salaries expense. Okay, we have your supplies expense. Your communication expense. Oh, if you try to take a look at the problem, there are two communication expenses here. Maybe it was not intended to be a communication expense here, but for purposes of answering this problem, let us just add the amounts of the two communication expenses later on. Okay, so communication expense, we also have here your advertisement expense, and lastly we have your depreciation expense. Alright, so once you know the accounts that you should reflect in your income statement already, you may now formally start in preparing your income statement. Okay, so in preparing your income statement, it is important to first know the rules on how to make a report in general. Okay, since this is a formal report or a formal document, it is always important for us to write first the heading, okay, for that particular financial report. And in writing the heading, it is always a three-liner heading. Okay, three-liner heading, because we should start writing the name of the business first. So this is how you should write the heading of a financial report. The first line is the name of the business. It should be centered. name of the business. Okay, then you have there the type of report that you are preparing. In this case, we have your income statement, but let's just write here type of report, and of course the date within which or for which the accounts are applicable. Okay, so let's prepare now the income statement for Andrew Repairs. Following the rules on how to write a heading, we start in writing first the name of the business here. We have Andrew Repairs. Okay. Next line is what type of financial report are we preparing? We are preparing an income statement. Okay, and then if we are preparing an income statement, take note that the accounts you see in the income statement are all called temporary or nominal accounts. When you say temporary or nominal accounts, at the end of the accounting period, the amounts, okay, shall be brought down to zero balance. Okay, so that for at the start of the next accounting period, you will start anew, okay, in accumulating now the amounts for your income statement accounts. Okay, so again, nominal accounts or temporary accounts are always closed, okay, and brought down to zero balance at the end of the accounting period. So at the start of the next accounting period, okay, the balances of these particular accounts are still zero. Okay, so income statement, then since these are nominal account, they are only applicable or they are only existing for a particular period of time, and that would be only for the year ended December 31, 2019. Okay, just fix this one, it should be centered. Alright, so now that we are done with the heading, the next is to put now the elements that should be seen in the income statement of Andrew Repairs. So in this case, you write here the amount of the revenue earned by Andrew Repairs. How much is the total revenue? There is 754,500. Okay, after computing for the revenue, the next thing that we have to do now is to of course deduct, okay, the total expenses that were incurred now by Andrew Repairs. Okay, so what are the expenses again? We have there your salaries expense. Do not forget to put an indentation here. It's very important so that your report would be easy, okay, to understand and be interpreted. Okay, so salaries expense. Since this is a report, you are not allowed to make shortcuts, no, for the words. You have to write them down completely. So salaries expense, you have here your supplies expense, you have your communication expense. We said a while back that there are two communication expenses here, but that is just an error in writing down the type of expense. So let's just combine the amount of the two communication expenses in this bracket. So aside from communication expense, we also have here your advertisement expense, and lastly we have your depreciation expense. Okay, so we put the amounts for these expenses. Salaries amounted to 51,000. Supplies amounted to 8,000. Your communication expense, that is 5,400 plus 4,000, we have 9,400. Your advertisement expense amounted to 3,000 pesos. Okay, let's put a tick mark so that we know that we already included them in our report. Your advertisement expense is okay. Alright, your depreciation expense amounting to 90,000. So you total and put it beside how much is the total expenses incurred now by the business. So that would be 51,000 plus 8,000 plus 9,400 plus 3,000 plus 90,000 pesos. So we have a total of 161,400. Okay, so let's counter check. 51,000 plus 8,000 plus 9,400 plus 3,000 plus 90,000, 161,400. Okay, so now that we have the values for our total revenue and total expenses, we may now compare the two. Okay, so that we will know whether the results of operation has resulted now to a net income or if it is a negative value to a net loss. So that would be 754,500 minus 161,400. That will now give us a net income of 593,100. As easy as that. Okay, so that's how you prepare an income statement for a service type of business. Again, what method is used in this particular problem? Since this is a service type of business, it would be more convenient to just simply itemize it, therefore applying now your nature of expense method. Okay, so take note, we are just preparing your income statement. Therefore, accounts that are not considered as elements of the income statement would have nothing to do in preparing now the income statement. We will use them later on when we move on in preparing your financial statements already. Okay, but for the meantime, we only deal with your income and your expense accounts. Okay, so let's move on in answering another problem. But this time we are going to prepare now an income statement for a merchandising type of business. Okay, now we may be allowed already to apply whether or either of the two forms of income statement, therefore the nature of expense and your function of expense method. Okay, but before doing so, there are certain things that you have to do first, before we could formally start preparing now the income statement for this merchandising business. Okay, so in this problem, Uncle Merchandising prepared its unadjusted trial balance for the year 2019. Take note that the data given to us this time is an unadjusted trial balance. Okay, therefore, since it is unadjusted, there are certain year-end adjustments that we have to perform first. Alright, the amounts that you see in an unadjusted trial balance, meaning the amounts you see here, are not yet the final amounts that must be used in preparing the financial reports. The amounts that may finally be used in preparing your financial reports must be those that which are already reflected in adjusted trial balance. So since we are given for the meantime an unadjusted trial balance, we have to first perform the necessary year-end adjustments. So we have here the pertinent information
that would now adjust the amounts, okay, of the various accounts presented in our unadjusted trial balance. Okay, so we have here the supplies at the year end amounted to 2,000. Number 2, the amount of depreciation on the vehicle amounted to 50,000 pesos, and the merchandise inventory as per physical counting amounted to 136,600. Okay, so let us prepare now the necessary adjustments, okay, that we should do in preparing now the adjusted trial balance for Uncle Merchandising. Okay, so the first adjustment, supplies. Okay, we were told that the supplies at the year end amounted to 2,000. So if we try to take a look at the amount of the unadjusted supplies, it is originally 15,000. So what should we do so that it will be reduced now to the amount of 2,000 pesos? Well, it necessarily means that 13,000 pesos is already used, right? So since there is already a use of a supply, a use of a particular asset, then it would be proper now for us to recognize an expense. And what expense is that? We have your supplies expense. So debit your supplies expense for the first adjustment. And what is going to be credited? Of course, for the supplies to amount to 2,000 pesos, we have to reduce the supplies by how much? We also reduce it by 13,000 pesos. Therefore, credit your supplies account, okay, both for 13,000 pesos. So what will be the effect, okay, in the accounts here now? So later on, this shall become 2,000 pesos, and your salaries, your supplies expense, this is going to be increased by 13,000. So later on, this should be equal to 15,000 pesos. Okay, that is 13,000 plus the 2,000 existing supplies expense. Okay, so that's for the first adjusting entry. Now for the second adjusting entry, we were told that the amount of the depreciation on the vehicle amounted to 50,000 pesos. Okay, there is only one pro forma entry on how to adjust now your depreciation and on how to recognize an accumulated depreciation. So you just memorize whenever there is a need to depreciate a particular fixed asset, the entry is this. Okay, you have to debit, of course, your depreciation expense. Okay, by how much? By the amount of depreciation computed. In this case, we were given 50,000 pesos. Okay, and of course, you debit now your accumulated depreciation account. Okay, your accumulated depreciation for the same amount of 50,000 pesos. Alright, take note that your accumulated depreciation account is a contra asset account. And when you say contra asset, it reduces a particular, or it reduces the value of a particular asset. In this case, since the depreciation is attributed now to the motor vehicle, the accumulated depreciation therefore is the reduction in the value or in the cost of the motor vehicle. Okay? But your accumulated depreciation is not an income statement account. Okay? This is actually an account that shall be reflected, okay, in your statement of financial position. Okay? However, your depreciation expense, being an expense, is an income statement account. That's why it is still necessary for us to make such an adjustment. Okay? And lastly, alright, we were told in this problem that the amount of the inventory at the end of the period is 136,600. Okay, take note, when we discussed a while back how to compute for the cost of goods sold, your merchandise inventory beginning, I told you where to get its value, right? The value of your merchandise inventory beginning shall be lifted from the unadjusted trial balance. Therefore, this 50,000 pesos that you see here is the value of the merchandise inventory beginning. Okay, so we compute for the cost of goods sold so that we will be able to make the adjustment here now. Alright, so the cost of goods sold is computed by first identifying the amount of your merchandise inventory beginning. Okay, let me just put my computation here. So merchandise inventory beginning, what do we do next? We add, so this is for the amount of those. We add now your purchases, okay, and your freight in if there are any, right? Freight in, and of course we deduct your purchase returns and allowances and your purchase discounts, so that we will be able to compute now for the total goods available for sale. Okay, let's put values now to the formula. So where do we get the value of your merchandise inventory beginning? The merchandise inventory beginning is from the amount of the merchandise inventory reflected in the unadjusted trial balance, which in this case is 50,000 pesos. Okay, your purchases amounted to 310,000, so you just have to put it there, 310,000. You have your freight in also, which should be added, so that's 5,000. Okay, if you try to take a look at the given, we have two confusing accounts here, freight in and freight out. Okay, it is only the freight in that is added to the purchases. Okay, but freight out really is considered as an expense. Therefore, if the delivery cost is classified as a freight in, then you have to add the amount of that freight in to your purchases. But if the delivery cost, on the other hand, is considered as a freight out, you do not add it to the amount of your purchases or to the amount of your merchandise inventory, because it is really an expense. Take note of the difference. Freight in is added as part of the value of the merchandise inventory, while freight out, being an expense, shall not be added to the amount of the merchandise inventory. Take note of that. So let's continue. How much is the value now of your purchase returns and allowances? That is 5,000. So we will deduct here your 5,000 pesos. Okay. And then we have your purchase discounts amounting to 3,000. We will deduct that also. Okay. So you get the balance. That would be 50,000 plus 300,000. Okay. Plus 5,000 pesos minus 5,000 purchase returns minus the discount of 3,000 pesos. So how much is our total goods available for sale? You should have computed there. You should have computed there 357,000. 357,000 pesos. Alright, so that's the value of our total goods available for sale. Now, to compute for the cost of goods sold, the next thing that we have to do now is to deduct the amount of your merchandise inventory end. And what did we discuss a while back? Your merchandise inventory end is determined by the physical counting of the remaining inventories in the business, the inventories that are not yet sold by the business. So in this case, we were given the data that the unsold inventory at the end of the period amounted to 136,000. Why is my pen like that? Okay, so the amount of our merchandise inventory is 136,600. Okay, so compare the values. We will now be able to compute for our cost of goods sold amounting to how much? How much is our cost of goods sold here? We have 357,000 minus 136,600. So the total amount of our cost of goods sold is 220,400. Alright. Okay. So once we're done computing now for the amount of our cost of goods sold, we could already prepare now the adjusting entry, okay, or the adjustments in order to bring now the amount of merchandise inventory to 136,600. All right. So in doing so, there are two steps, okay, that needs to be done here. Okay. So the steps that we have to do is to first set up the merchandise inventory, okay, the value of the merchandise inventory at the end, okay, of the accounting period. And how do we do that? We just have to debit your merchandise inventory and okay, so how much is the value of your merchandise inventory? And we have 136,600. Okay, and we credit now a temporary account called your income summary account. Your income summary account is used usually to close now temporary accounts, okay, like your income statement accounts. When we are going to bring them later on to zero balances, we are going to make use of your income summary account. In the same way, we are going to close now your temporary accounts which affect the merchandise inventory. So we are also going to make use of your income summary account in this case. So we credit for the meantime your income summary account for the same amount of 136,600. Okay, so after that, the next step that we need to do now is we could already set up the amount of your cost of goods sold here. Alright, so how do we do that? We just have to reverse, okay? Reverse all the temporary accounts which affect the merchandise inventory against the income summary account. And whatever amount is the difference will be the same amount of the cost of goods sold we have computed here. So for you to better understand that, let's do it step by step. So what you do first is to determine the temporary accounts that affect the merchandise inventory. What are those again? You have your purchases, okay. You have your freight in, your purchase returns and allowances, and your purchase discounts. All of those are temporary accounts that also must be closed against the merchandise inventory account. So in order to close their amounts, we have to reverse, okay, the entries for these particular accounts. When we say reverse, if let's say for example purchases is originally under your debit side, to make it zero, it should be credited. Okay, that's how you reverse and close now an account. So let's do it step by step. Purchases are originally debited, therefore to close it we have to credit your purchase accounts. Okay, so we have to debit your purchase account, credit purchase. How much is the amount of our purchase here? We have 310,000 pesos. Okay, next, your freight in. Okay, your freight in is originally debited, therefore to close its amount we have to credit it. So credit freight in, we have 5,000 pesos. Next, we have purchase returns and allowances. They are originally credited, therefore to close them we have to debit this time. So you have your purchase, returns, and allowances, debit for the amount of 5,000. Okay, and next you have your purchase discounts. Originally they are credited, therefore to close them we have to debit your purchase discounts now. Okay, so for the amount of 3,000 pesos. Alright, now the next thing that you have to do after closing now the temporary accounts is to reverse also the amount of your merchandise inventory beginning. So the amount of your merchandise inventory beginning is 50,000 pesos. This one. Okay, take note of this. Now, then after closing the temporary accounts, we have to close also the amount of your merchandise inventory beginning. So to close it, if the merchandise inventory beginning is originally debited, okay, we therefore have to credit it this time. So you have your merchandise inventory beginning to be credited for the amount of 50,000 pesos. Okay, so the last step in making the adjustment here is to recognize now your you cannot recognize it yet. You have to first reverse your income summary account, okay, recorded under step A here. So your income summary is originally credited for 136,000, right? 136,600. Therefore, to close its amount, okay, if it is originally credited here, to close it, we have to debit it, income summary, for the amount of 136,600. Alright, so after doing all those, we can now recognize your cost of goods sold here. Whatever difference between the debit and the credit side is, okay, the difference will always be debited to your cost of goods sold account. So take note that the cost of goods sold here that we were able to compute is 220,400. Therefore, the cost of goods sold that must be computed here should also amount to 220,400, meaning the difference between the total of this and the total of this shall amount to 220,400. So let's check if the computation is correct, right? So the total debit side is 5,000 plus 3,000 plus 136,600. Alright, how much did you total? You should get 144,600. Okay, and your total credit side is 310,000 plus 5,000 plus 50,000. Okay, you should have computed 365,000. Okay, so you get the difference between these two. You have 365,000 minus 144,600. How much did you get? You should have computed 220,400, which is the same value as we have computed here. It's not magic, it's just accounting. Okay, so when you try to compare this 365,000 minus 144,600, the resulting value is 220,400, which is the value for the cost of goods sold here, the same value that we have computed here. Alright, so we're all good. We're done with our adjustments already. Then we just have to prepare now your adjusted trial balance. Okay, let's just incorporate the amounts to your adjusted trial balance. Alright, so let's move on. Okay, so after performing now, this is your adjusted trial balance. Okay, I already prepared here your adjusted trial balance. We just have to fill in the amounts here. So let's prepare. Is the cash affected? No, so we just have to copy the cash, 35,000 The accounts receivable is not affected, 63,000. Is the merchandise inventory affected? Yes. And we adjusted it to 136,600, right? Now your supplies is also affected. The remaining supplies is now 2,000. Your motor vehicle is shall not be affected, but it will be reduced by the amount of the accumulated depreciation. So we have here your accumulated depreciation amounting to 136,000, your 50,000, which we have credited a while back. So let me just show you again what did we do with your accumulated depreciation here. We credited it. Okay, so we add here an account accumulated depreciation 50,000. Okay, and your depreciation expense, since there's no depreciation expense yet, we have to add an account for depreciation expense, and we debited here an amount of 50,000. Okay, so the motor vehicle stays to be 300,000 pesos. Okay, I think I copied the wrong amount for the land and building. This should be 900,000. Okay, so we go now to the credit side. Accounts payable was not affected by the adjustment, so copy 30,000, copy 12,000, 15,000. Okay, your 35,000, your 1.2 million, 453,900. Okay, so your sales is your sales returns not affected by the adjustments, therefore you just have to copy it also. 2,000. Your purchases, they are now zero, so there's no balance for purchases, because if we try to take a look at our adjustment, your temporary accounts, purchases, freight in, merchandise inventory beginning, purchase discount, and purchase returns and allowances are all closed already. So in your adjusted trial balance, the amount of purchases is zero, your freight in is zero already, your purchase returns and allowances is zero already, your purchase discount is also zero already. Okay, so next, we copy your expenses. So salaries expense not affected by the adjustment, 61,000. How about your supplies expense? Yes, we adjusted your supplies expense. We debited additional 13,000. So your supplies expense should now be equal to 15,000 pesos. Okay, we have two communication expenses here again. Alright, let's just use them. Let's just copy them just the same. Later on we adjust, we just add the values, okay, so that we will be able to prepare this report. So 2,000, copy your advertisement expense, nothing has changed. 3,000, okay, 1,900, you copy it just the same. 2,500, we copy it just the same. Okay, so are there other adjustments that we need to do here? Yes, take note that in the adjustment for the cost of goods sold, what did we do? We recognize an additional account in the form of your cost of goods sold. And what did we do with your cost of goods sold? We debited its amount. So it shall also be reflected in your adjusted trial balance. Therefore, we recognize your cost of goods sold, okay, debited for the amount of 220,000. Okay, 220,400. Alright, take note that this is a trial balance. This is a trial balance. Alright, therefore, if we still total the amounts of your debit side and your credit side, we should still come up with equal balances for debit and credit. So let's try, because if they did not equal, there may be along the process we may have done something wrong. Okay, so let's total. We have 35,000 for cash plus 63,000 plus 136,600 for the merchandise inventory end plus 2,000 plus 900,000 for the land and building plus 300,000 for the motor vehicle plus 1,500 plus 2,000 plus 60,000 plus 50,000 plus 2,000 plus 3,000 plus 1,900 plus, I'm already in the freight out, 2,500 plus 50,000 depreciation expense, and your cost of goods sold amounting to 220,400. Okay, so how much is the total for the debit side? I was able to compute a total of 1,795,900. Okay, before we total your credit side, let us counter check. Okay, so again, 35,000 plus 63,000 plus 136,600 plus 2,000 plus 900,000 plus 300,000 plus 1,500 plus 2,000 plus 61,000. I'm already in salaries expense plus your supplies expense of 15,000 plus 2,000 plus 3,000 plus 1,900 plus 2,500 plus your depreciation expense of 50,000 and your cost of goods sold of 220,400. So yeah, this is correct. I still got 1,795,900. You should get the same total when you already compute for the credit side. So let's try. Okay, we have here 30,000. Okay, so we start here plus 12,000 plus 15,000. Okay, plus 35,000 plus 1,200,000. Your sales of 453,900 and your accumulated depreciation amounting to 50,000. So we were able to compute the same balance of 1,795,900. So in this case, we can already prepare the income statement for Uncle Merchandising. Okay, so we can now prepare the income statement for Uncle Merchandising here. So in this particular problem, we are required to prepare now an income statement using your nature of expense and your function of expense method. Alright, here we have here a better presentation of the adjusted trial balance for Uncle Merchandising. So we already integrated here the adjusted balances or amounts of the accounts. Alright, so first things first, okay, we have to prepare the heading for the income statement. So we have to write the name of the business. This is Uncle Merchandising. Okay, we are preparing now an income statement. And since we are dealing with temporary or nominal accounts, the proper way to date the report is to use the phrase "for the year ended." for the year ended December 31, 2019. Okay, so we are now ready to prepare your income statement. So the first thing that we have to do is to determine how much is the income earned by the business. So in this case, we have a sales, right? Since this is a merchandising type of business, the income is reflected as sales. However, take a look at your adjusted trial balance. Sales of 453,900 is the gross sales here because your sales returns and allowances and your sales discounts are not yet deducted. What did I tell you a while back? How in preparing your income statement, I told you that the amount of sales must already be the amount, okay, of the net sales, meaning the sales that is reflected in your income statement should already be the net sales. So we have to first compute, okay, compute first for the net sales. So how do we compute for your net sales? Again, we have gross sales less sales returns and allowances and your sales discounts. Okay, so how much is our gross sales in this case? We have 453,900 minus the returns and allowances of 1,500 minus the discount of 2,000 pesos. Okay, so the amount, okay, let's just fix this one so that it could still accommodate spaces later on. Alright, so again, gross sales amounted to 453,900 minus 15, okay, minus your discount of 2,000. Alright, so how much is our net sales here? The net sales amounted to 453,900 minus 15 minus 2,000. So we have 450,400. Okay, so the sales that must be reflected in our income statement therefore is 450,400, not the 453,900, because that is still in its gross amount. The sales that must be reflected in your income statement should be in its net amount already. Okay, let's continue further. Okay, in a merchandising business, we said we have to deduct from the sales the amount of the cost of goods sold that we have computed. Since this is a report, complete everything. So cost of goods sold, how much is the cost of goods sold we have computed? That's 220,400. Okay, so you compare their values, we should be able to compute for the gross profit. When you say gross profit, it is really the amount of the markup, okay, that the business earned from selling that particular product now. So in this case, the markup or the gross profit amounted to how much? 450,400 minus 220,400. So we should get a gross profit amounting now to 230,000 pesos. Okay, so since this is a nature of expense, alright, all we have to do is to deduct the expenses by itemizing them. Okay, so we just have to itemize the very same expenses that are reflected in our books here. So how do we do that? We start with your salaries expense. Okay, we have your supplies expense here. We have your communication expense. So as I told you a while back, there are two communication expenses here. This is just an error of typing the problem. We just have to add the two. Okay, so aside from communication expense, we have advertisement expense. advertisement expense and your depreciation expense. And look at this one, there is freight out. It is different from freight in. I'll repeat, freight out is an expense, freight in is part of the merchandise inventory. So in this case, we are also going to consider it as an expense. Alright, so let's determine the amount of the expenses shown in the problem. We have your salaries expense amounting to 61,000 pesos. Your supplies expense amounted to 15,000 pesos. Your communication expense 2,000 plus this one, so 2,000 plus 1,900. How much is that? 3,900, right? And your advertisement expense of 3,000. The depreciation expense of 50,000 pesos. And finally, your freight out of 2,500 pesos. Okay, so you just get the total of the expenses. That would be 61,000 plus 15,000 plus 3,900 plus 3,000 plus 50,000 plus 2,500. Okay, so you should have computed your total expenses as 135,400. Okay, let's counter check. 61,000 plus 15,000 plus 3,900 plus 3,000 plus 50,000 plus 2,500. So yeah, that's correct, 135,400. Okay, so we are now ready to compare the amount of the gross profit from the total expenses to determine whether the result of the operations resulted to a net income or a net loss here. Okay, so to do so, that would be 230,000 minus 135,400. So we have a net income amounting to 94,600 pesos. As easy as that. Okay, so that is for the nature of expense. What if we are required now to make use of your function of expense method? Well, it's still easy. It's still simple, we don't really have to change the first part of your income statement, because the only difference between your nature of expense and your function of expense is the manner on how we are going to present our expense. Okay, so let us first identify whether the expenses are considered part of your selling or administrative expenses. Okay, so let us read first the information, okay, which would help us now in determining, okay, whether expense is part of your selling or your administrative expense. So in this case, we were told that 20% of the salaries were paid to office personnel, while 80% were paid to the selling department. So in this case, your salaries, okay, of 61,000 pesos, okay, is distributed to the selling department and your office personnel. Okay, so selling, of course, the amount of the salaries paid to the sales department should be part of your selling expenses, okay, or distribution expenses, while the salaries paid to the office personnel, since they are not directly attributed now to the storing, to the production, to the manufacturing, to the delivery, to the advertisement of the product, then they shall be part of your administrative expenses. Okay, so this is 20%. This is 80%, okay, and this is 20%. So how much is 80% of your 61,000? So that would be 61,000 times 80%. We have 48,800 salaries expense for your under your selling expenses, and then the remaining 20%. So 20% times 61,000 for the salaries expense. We have 12,200 salaries expense for your administrative expenses. Okay, so let's put them here. You have selling expenses. We have to indent that. Okay, so selling expense. Your selling expenses are, okay, what are the selling expenses that we have identified? First, your salaries expense. Okay, amounting to how much? The salaries expense amounted to 48,800. Okay, this is the 80% of that 61,000 pesos. Okay, on the other hand, for your administrative expense, okay, we also have here the salaries expenses paid to office personnel, okay, which is 12,200. Okay, so that's 12,200 there. Next, so we're done already with the salaries expense here. Next is supplies expense. Supplies expense, they are not generally used in the storing, in the production, in the advertisement. Therefore, they are more of to be attributed as part of your administrative expense. So you put them here, supplies expense, amounting now to 15,000 pesos. Okay, next, your communication expense. Of course, I always attribute communication expense as part of administrative expenses for purposes of office functions. Okay, so our communication expense amounted to, how much is our communication expense here? Since due to the error, let's just combine the amount. So that is 3,900 pesos. That 2,000 and 1,900. Okay, and we have here your advertisement. All right, from the term itself, immediately you would know that it is intended for the selling of the product already. So advertisement expense is part of your selling expense for the amount of 3,000 pesos. Okay, and we have here, of course, your depreciation expense. Depreciation expense, actually depreciation expense may either be selling or administrative expenses depending on the usage of that particular asset now. So our asset being depreciated in this problem is our motor vehicle, right? If the motor vehicle is used in the selling of goods, then the depreciation expense would be considered more as part of your selling expenses. But if the motor vehicle is not used in the delivery of goods, rather it is used for the utility now of the office personnel or the workers of the business, then it's more of as part of your administrative expense. Generally, when you say depreciation expense, since this is a motor vehicle and a merchandising business, more likely the motor vehicle is used for delivery, right? So let's just consider it as part of your selling expense. So depreciation expense therefore is 50,000 additional to your selling expenses. And lastly, we have here your freight out. From the term itself, immediately you know that already it's the delivery cost. Therefore, it is under your selling expenses. So the amount of freight out amounting to 2,500. Alright, then you get their totals. For your total selling expense, that it's 48,800 plus 3,000 plus 50,000 plus 2,500. Okay, so we have a total selling expense of 104,300. Okay, so on the other hand, the total administrative expenses should be 12,200 plus 15,000 plus 3,900. So this is 31,100. Alright, you just deduct the values of the selling expenses and administrative expenses from the gross profit, then we should still be able to get the same amount of net income or net loss. In this case, a while back, we were able to compute for a net income, and how much is that? That is 230,000 minus 104,000 for the selling expenses minus 31,100 for the administrative expenses. So the net income is still for the same amount of 94,600. Okay, so that's how easy it is to prepare an income statement for a service type of business and a merchandising type of business. Okay, if it is a service type of business, it's very easy. When you prepare, on the other hand, an income statement for a merchandising type of business, it's still relatively easy, but it involves more process. It involves more process, therefore it makes it look more complicated. But if you just follow the process, okay, that's how we have answered it in our lecture, then nothing will go wrong. Alright? So there, review points in preparing an income statement. Of course, you have to know the purpose. Why do we prepare an income statement? Okay, we have answered that a while back. What are the elements of an income statement? We are already able to identify those. What are the forms of an income statement? We just prepared income statement using both your nature of expense and your function of expense, so you should know that already. And of course, you should know between net income and net loss. When is there a net income? Of course, if the total income is more than the total expense, then there's a net income. On the other hand, if the income is less than the total expenses incurred, then there is a net loss. So that is how we prepare an income statement.